Welcome, everybody, to episode number 15 of the Cream Podcast. I want to give a shout out to the world champion Golden State Warriors.
All right, Jason, now we're recording this on Friday, June 10th. And as of today, stocks absolutely got hammered. If there was any optimism in the stock market or on Wall Street, that seemed to have disappeared today. So tell us what the heck happened.
So today, the Dow Jones average dropped almost 900 points, 880 points. The S&P 500 lost 2.91% in value. The NASDAQ dropped 3.52%. Oil dropped down 1%, which is good news for most of us. And then if you look at, so it's been a very volatile market, all due to the CPI or the inflation numbers that just came out. So that we're expecting lower inflation, but inflation numbers actually increased to 8.6%, which caused everybody to be startled as we was hoping that was at peak inflation. But it looks like inflation is still growing after it dropped in the last report, in the month of May report, before while it has increased more than it did in the March report for the inflation rate. So inflation rising, and it scares everybody because that means the Fed are going to raise rates even more in the upcoming meeting on June 14th and 15th, and also again in July, and it might be more than they expect right now at a half a point. So very interesting times.
I think they have to react to that. They can't let, like you said, they were a little bit optimistic from the previous month's inflation numbers. They thought it had peaked at least, but I think they're going to have to start hammering 50 basis point interest rate increases just to try to keep it from hitting. Imagine if it hit 10%, how much everyone would freak out.
Yeah, big time. And then I was listening to CNBC yesterday, and they said a big mistake that they think the Fed's made. One of their commentators was that they took off the 75 basis points off the table in the last comments. And they said they should have kept the 75 basis points as just a bullet in the chamber because they just didn't know what the inflation rate is going to be. It's a lot higher than they expected. But who knows? And remember, the problem for if you're a borrower and for businesses is with the increase in interest rates, it's going to cost you more to service your debt. And we already see that with like the 10-year yields is now above 3% following it. Interest rates on mortgages is going to go up. Everything, the cost of doing business is going to cost. And the whole basis of that of them raising rates is to slow down the economy for a recession.
When do you what's your take on your prognostication on when inflation will actually peak and we'll actually see it start coming down? 2% is their goal. That seems like a long way off.
I'm not sure. I think there has to be a lot more in rates to go up a lot more for that to happen. Based off of commentary, some people say in 2024, inflation might go down. If you hear some people, they say if the Feds don't get ahead of this, that we could be in this for long periods of time. So, and it's not just a United States problem; it's a world problem. The whole world is seeing inflation from all, from the supply chain issues, which is happening around the world, from the money printing as well that everybody did to help stimulate the economies during COVID when everything was shut down.
To Ukraine and everything going on and, disruptions with Ukraine and the war.
Exactly. So it's like the perfect storm for inflation. So how do you unwind it? Because you can raise rates, but all you want, but if it's still hard to get oil, it's hard to get oil. So then the cost of everything goes, cost to get products and services into your place. And then as international relations are starting to get more complicated, it's going to be even harder to get some supplies. So I'm not sure, man. It's very interesting times.
Yeah, and when we talk about inflation coming down too, it doesn't mean prices are going to come down. It means that it's going to stop rising as quickly or as fast. So you better batten down the hatches and make some smart financial moves because the world is an expensive place to live well right now.
Yeah, and I think some people, if you listen to Ray Dalio, he says that he thinks there might be some stagflation, and we're going to be in a stagflation period like in the 70s. But if you're opportunities, this could bring a lot of opportunity for a lot of people.
Yep.
I think especially here in the Bay Area where Tech been so hot for so long, and now the most nervous people right now are the tech industry because it's the first time they have seen layoffs and hiring freezes for a lot of them, especially millennials who've never seen a recession before.
Yeah. Yeah. No, it's definitely coming. So that's interesting. Thank you for that analysis. And we'll keep everyone updated on the stock market, of course, and the greater economy when we can.
I was talking to my buddy, Steve Peterson, today on a couple of real estate deals that he's seen at his office that they just closed, and there were price reductions. He said, there's actually deals right now, and you have owners willing to negotiate with you for price reductions. Yep. And then he's starting to see more foreclosure in the market. So if you got some cash and you're creative, you can definitely do some creative financing and stuff. So.
And the big difference between now and, like we talked about last podcast, now in 2008 is the amount of equity people have, and how conservative the loans are. So your loans aren't really going up because everyone's just got a 30-year fix. Maybe your taxes are going up, and if you're, for most people in the U.S., if you're distressed, if you can't pay, if you're out of cash and you need, you sell the house, no problem. You walk away with money. But so you'll see a lot of deals, but I think it'll be, off market or quick sale deals or, lease back deals, some creative stuff. But I don't think you're going to see a ton of foreclosures and distressed properties at all.
Oh, yeah, I agree with you on that. I think there's going to be deals like that. You won't see that many. You won't see a crazy amount of. 08 through 010 for real estate market was crazy.
I was like the whole system fell apart, right?
Based on the whole system. And this is a different beast.
Yeah.
So I think the problem going for real estate, I don't know, for most things is, especially for real estate, is going to be matchmaking. With interest rates rising, you're going to be costing the cost. It's going to cost you more to get a mortgage because interest rates went up on that mortgage. The owner, the seller, the buyer and seller are going to have to negotiate and and work something out. You're just not going to have as many buyers as you once have. So everybody has to work together to make a deal happen.
Well, yeah. I mean, sellers were rock stars over the last, couple of years. They could choose their terms. They could set their price sky high and have 100 people at their open house. And then people were bidding 50, 70, 80 grand above what they were asking. I mean, it was absolutely ridiculous. So the pendulum will come back, which is actually healthy for the housing market, where buyers will have some leverage again. And, we're already seeing some price reductions in California, like you mentioned. But there's encouraging signs that there's also, it's not just interest rates, but there's other shifts and different programs or fees or costs that are basically amenable to this changing market that are softening the blow a little bit for buyers. Mm-hmm. So for instance, the average 30-year fixed right now is about 5.375 as of, I think, Tuesday. But FHA and VA is like 4.75 or something like that. So it's still, that's still a darn good rate. I don't care, it's not a 2%, but still a very solid interest rate. But they're also doing things with different programs, like raising the income limits per county for conventional loans. So more people will qualify for different programs that allow like lower down payments. And FHA is already put out a release that they're going to lower their private mortgage insurance, their mortgage insurance requirements. So it's going to be a little cheaper to get mortgage insurance. So there's a little adaptability. There's a little flex in the market.
If rates go up to 6%.
Yeah.
And it's not bad. It's just going to be a sticker shock, especially for millennials who've seen, and most of us who've been seeing declining interest rates forever. And this is the first time you've seen interest rates go up, and people are going to be shell shocked.
That's the thing. It's sticker shock, but we've seen that. We've seen that back in the day when, no one got a 30-year fix back in the day, but, it was 6.75 if you're paying a point or two, or, but you know what? And then people don't talk about it enough, but it's like, well, how about a 15-year fix that's, right now, I don't know, 4.25%, or how about an adjustable, or maybe interest only comes back in the market, a 10-year interest only that's, at a, 4.9% or something like that. So there's still options no matter what people say. Well, let's talk about from a the possibility of a recession, stagflation, inflation, we're already seeing. From a financial planner, from a financial advisor standpoint, what do you see are some of the creative solutions or new solutions or best solutions that are in the markets for people?
One thing I see is a couple of things is one, you can't just throw everything on the wall and think that it just is going to make money regardless. I think right now everything is about being really fundamentally sound. So if you find companies that has great cash flows and positive cash flow, don't have a horrible burn rate like you see a lot of these tech startups have over the last few years, your WeWorks and your Ubers, I think there's a lot of opportunities with that. Also, I think this is a pretty good time for, I was having a conversation with my mother, for retirees and people about to retire, because instead of taking on so much risk to generate the retirement income that you need, now as interest rates have risen, allows them to put more money in safer assets to generate the income they need for retirement without having their money so much in risk. And as you get older, you really want your money to be safer, especially your income to be in a safe place. But because of low interest rates, a lot of retirees was taking on more risk to get that income that they needed because interest rates were so low. So those are the two things I'm really seeing now that's really coming into place, where those interest rates have went up. So it really has benefited those people.
Wow, interesting stuff. Yeah. Let me ask you too, and this is another segment, but the recession outlook. I had sent you last week something or 2 weeks ago when we did this about Chairman Jerome Powell were saying soft landing is more likely than not, and then that went into, oh well, we may feel some pain, and then it's sort of like he's walking back his comments because he knows the shitstorm is coming. But let me get your take on the possibility or outlook for a recession.
I think it's increased. I think we're going to recession. I don't think it's nothing bad. I think we try to kick the can and try to avoid recession, but I think, you need 4 seasons. You can't have everything grow forever. There's a reason why you have wintertime, springtime, fall, and summer. And it's just like for all economies, you need a recession. So I think chance of having a recession is happening. The question is, what's worse, having a recession or a stagflation? I think I'd rather have a recession over stagflation because it's so hard to get out of stagflation compared to recession.
It's like stagflation's like a self-perpetuating cycle, huh?
Right, because I raise interest rates, I drop the demand, but then prices keep going. And so how do you get out of that? Volcker helped us get out of it in the late 80s. And also, not just him, but also demographics took a huge part of that because the baby boomers were making money at that time and borrowing things because they're at their peak earning years and their families were growing at that period of time as well. So, but you need recessions. Recessions allow people to who are disciplined, smart, with their money to take advantage of some situations while it clears out the room for all the bad people. It's like a wildfire. You can't have, you need some of that brush to clear out some of that dead wood before you have new growth in the forest. So it's the same exact thing. So,
yeah, I mean, a recession is, like you said, people are so scared of it, but you can't have growth forever. You can't hit the gas pedal without hitting the brakes eventually and tapping the brakes and slowing down a little bit. And it's a better name for it probably would be a correction. Because there's exactly what you said. A lot of people are throwing money up against the wall with investments, business growth, stocks, buying things. And it's not based on any fundamentals anymore. It's just based on, a rising tide lifts all boats. And so with the recession, you actually need to invest acutely and smartly and accurately again. So I know a lot of people are thinking 2023 is definitely the year recession is coming, huh?
Yeah, definitely. And just think about it, last year at this point, look how many people was talking about. I know I was going to the gym last year. Yes, so many people talking about crypto, NFTs, buying options. Now you don't even hear those people anymore. Nobody talks about it anymore at the gym. Is a dead conversation. You don't even hear anybody mentioning that anymore.
No, a lot less crypto bros doing their curls and working on their bench press these days, huh?
Yeah, man, you gotta just do this coin or do this coin, man. You get rich like that, and now that day has passed, which is a lot of those people took losses, which is fine. Now you learn from it. It's almost like we're avoiding getting it cold and right now. Like we want to not have a cold forever when you need that to build up your immune system. So
yeah, it's a good analogy. Good analogy. And yeah, that's another thing with cryptocurrencies of, I definitely invested some, my little humble money that I invest. And, it's gotten clipped, probably a good 40% since I bought. But like anything, you hold and then you learn that you actually invest for a reason, not investing just in a segment or a sector or a vehicle just because,
right. And not everybody's like day traders. I think we made people day traders by making quick money overnight. And they didn't know a crap what they were doing about. Everybody was an expert, but they didn't know crap. So
yeah. All right, Jason, these days we're talking about recessions and investing and inflation and what to do with your money and how to prepare for retirement, because we're the old dogs in the room now, and we've seen this movie before with the recessions in 2008 and even in 99 2000. But Gen Z, they're coming up and they're trying to figure it all out for the first time, and they're probably taking their advice from not so very good sources when it comes to finances. So there's a stat that actually 28%, of Gen Zers are seeking financial advice from social media. Not only do they see their financial advice just through scrolling through their social media, but they're actually seeking and listening to financial advice on social media. So what have you to say about that?
I think the problem with that is two things. One of them, there's all these gurus on social media, internet, and they don't know what the hell they're talking about. Two, everybody's situation is different. So every plan has to be different based off of the person, personal issues, personal situation overall. And when you go online with that, you're simply not getting that. You're simply not getting that. And then a lot of these gurus who say, hey, man, I made this money real quick. They're full of shit. They don't know what they're doing. And like I said, during good times, you can say whatever you want and make money. But during these times, you're going to see who really knows what they're talking about and who doesn't. There's about to be so many people out the market. I actually want a recession because you want to get so many people out of the marketplace who say they're what they are and it's simply not true. And they're going to go to the wayside, and then you're going to see what's real. And that's in all aspects. You want to see that in real estate. Which real estate agents know what they're talking about? Which ones don't? Which advisors do or don't? You're going to see which businesses are real businesses, which ones are just, at the end of the day, just Ponzi schemes. So I'm actually excited for a recession to happen.
Yeah,
I can't wait.
I think it's very necessary to, again, recession is such a negative connotation, but exactly what you said, it's almost a rebalancing, right? A recalibration. But you see on social media, Instagram, whatever, all these, oh yeah, I do this and this is my side hustle and I, buy vending machines, and some of it's sound advice but make $1 million on Airbnb and you never own a property. It's like, come on. But my whole point to people,
and they get the Lamborghini, every single time.
Of course.
You know who's getting rich the most out of all that?
Lamborghini.
The guy who's bringing out the Lamborghini to them for every single photo.
And all the crypto people, like we said, that now, even the endorsers, the celebrity endorsers, now they're like, backtracking and walking themselves away from that. But this is how you tell if it's complete bullshit or not. If someone is making, $1 million a year, $10 million a year, whatever, on this great investment opportunity, why would they stop, take a bunch of time, create courses and videos and content, hire agencies and put it out on Instagram to offer to the masses instead of just keeping doing what's making them money?
Yep.
Like, why would you do that? So if you have gold, why would you stop and offer gold to everyone else and increase your competition and dilute what your product? And it just makes absolutely no sense. So that, if someone's selling to you on Instagram and selling you the promise of the get rich quick and the easy life and stuff, then just walk away, huh?
For the most part, man, it's only like one person I'm thinking about who seems like they're pretty legit with it. And that's probably like Grant Cardone, but yeah, man, you're absolutely right. Yeah, you're absolutely right.
I know you're a Grant fan. I think he's a little slippery. He's got a little snake oil in him.
I think he's so too, but then they say his numbers. Some people say his numbers are actually true. So,
well, I also think he plays the game, and he's probably plays it better than anyone since Donald Trump. As a business person, meaning he understands, you want to build your your assets and your companies and your real estate and everything not to be your personal holdings and to be recession proof and bankrupt proof. And so, if things go up in value, if things are cashing in, then you benefit. If things go south, you walk away and be insolvent, or you're not tied to it personally. So I think he's figured that part out, huh?
Right.
Yeah.
Definitely. And when you talk about that crypto and Bitcoin, I'm looking at all the celebrities who got sued for doing all these pumping dumps, or with these crypto companies and NFTs. Like, hey, buy this NFT or crypto without disclosing. Hey, they're paying me to do this advertisement without they're paying me, and they didn't disclose they're getting paid to do that advertisement. Talking about this is the greatest thing since sliced bread. And now you see all these lawsuits happening to like Kim Kardashian and Paul Pierce, Floyd Mayweather, DJ Khaled, which is interesting, Jake Paul. It's like a whole crazy list of them.
Interesting. Yeah. And one other place you mentioned, Grant Cardone, one other place that I think is to get your head on straight when it comes to business, growing a business, being an entrepreneur, investing, making money. It's not necessarily the nuts and bolts of finance and investing, but it's the sort of the theme of it, sort of like the philosophy or the moral compass of it is Gary Vaynerchuk. Yeah. I really like him just for his authenticity and, his hard work, the immigrant mentality. I really like Gary V.
That's that East Coast in you, man.
There you go.
Guys, that's that East Coast. Even though you guys are rivals, I know you're a Celtics fan. He's a Knicks fan, but that's that East Coast love, man. But I do love Gary V. I remember him even in the show Crush It, or his first book Crush, I should say. But yeah, that's that East Coast bias right there. But I agree, man. I love Gary V.
We ain't afraid of hard work. That's the difference, huh? We're not just trying to be out there in the convertible with the sunshine every day of the year. We actually need to earn it on the East Coast.
Yeah, that's what that New York hustle is about, man. Because you guys. Yeah. It's miserable. While California, you could have, especially right now with global warming, you could have 80% of your day is great weather, and you're not worried about it. It's like it's a great day. I could work or play, and it can be tempting for a lot of people not to.
Oh, of course. So, yeah. God bless California, man. But so let me ask you this too, Jason, with, we talked about where Gen Zers are getting too much of their financial advice, or a lot of people influenced with their financial decisions by social media. What are some good places that young people or anyone should go to get good investing advice?
A couple of good places is if you go read, it's a really good book. I'm talking to you. I think it's probably the best financial book besides The Age of Self-Reliance. It breaks down to the Richest Man in Babylon. Is probably the greatest financial book of all time, because it gives you the keys to building wealth. After that, I would tell people just continue to watch CNBC, MSNBC, watch this podcast, find out people who I would recommend talking to, advisors who have been consistently in the industry since the last recession. If they haven't been in the last recession, they're just so new and fresh, they don't know what's next. But talk to people who have that experience, who talk about, hey, I've been here before. I've been through these storms. I've been through it. Not just no fly-by young person who's never been there before. Ask them also, find out if they're supposed to be telling you what's their designations and backgrounds, because they should have some type of educational background also getting into it.
Yeah, that's a great point. Richest Man in Babylon, you mentioned that. Of course, your book, The Age of Self-Reliance, which we have to give a shout out because you wrote that, 4 years ago now or something? And
4 years ago.
4 years ago, and you predicted exactly what's happening now and what's probably going to happen in the next 2, 3, 4 years with stagflation and inflation and, like different municipalities and cities and states going bankrupt. And so I think the key point is too, if you're listening to someone who just says, this is how you make money more, versus a true seasoned financial professional says, this is how you protect your money, and this is how you mitigate risk, and this is how you act on the downside when things are crashing or not going well. That's the person that you need that balance as well. It's not just about making it, it's about protecting it.
Yep, so true. I want everybody just to recognize Juneteenth. It's a great historical day in America, and just remember the trials and tribulations of the people who was enslaved during that period of time and the challenges they have, and how America, we're still working on enhancing and overcoming that. And as we celebrate Juneteenth here in the United States of America.
All right, Jason, now on the Cream podcast, you're going to do the shout out of the week. What do you got for me today?
Yeah, I want to give a shout out to Tierney Allen. I want to congratulate him on his new event space. Torch Oakland is a brand new rooftop event space. So I want to definitely get a shout out to Tierney Allen with his new spot, Torch Oakland, a new event space.
Nice. That sounds like a good setup and another great thing for people to do and a place to go there in Oakland.
Thank you again for watching episode 15 of the Cream Podcast. If you love the episode, please hit that subscribe button and press share. Thank you once again for watching Cream Dollar Bills, y'all, episode number 15.